Hello guys, glad to have you on board again today. I'm sorry, I thought I already told you, but I was away from home today for moving out in a different city in France, meeting some people. So if you thought, what the hell's going on, why don't we have a podcast today, then that was absolutely normal, but I just forgot to tell you, so I'm really sorry about that. I'm responsible for the mistake. But anyway, I never thought I would be doing something today, but I think I have to, and instead of waiting for tomorrow, I'd rather like to say it right now. I'm sorry because it's late. Obviously, I wish I could have done that earlier today. Yesterday evening, I decided to trigger an entry on cryptocurrencies, and especially Bitcoin. Though, I'm going to go straight to the point. Tiny position sizing, just a simple buy and hold reinforcement, for the reasons that I haven't been triggering any reinforcements on Ethereums and Ripples, just Bitcoin and just a real tiny position sizing, like 10% of what I already had, no more, no less. It's just, if you remember this crazy fucking bullish parabolic move, I made my first profit taken in there. I don't remember if it was 10% or 15%, but it was 10 and 15% between those two peaks. So let's assume 15 and 10% in here, all right? And then a final 25% as we reached out to this area. So I've been selling half of my buy and hold portfolio for cryptocurrency, for Bitcoins, though it's a significant high number, in which I've been taking just 25% profit on Ethereums and Ripples. So I had to come back into Bitcoins. Definitely this area is the one I have an in-depth look at. This is the prices I want. That doesn't mean this is the prices I get. And this is significantly different. I told you that I was looking at how prices behaved in this area. I told you, technically speaking, this oversold cluster in here is not really enough with just like that as an information to be bullish. But as I saw that yesterday, we were making a bullish engulfing, closing on top of the previous day's highs. This is what I said, all right, I'm going to see how we do the next day. Basically yesterday. So late yesterday I said, all right, we're fucking holding on to this area, so I think I'm gonna do a little buy just to make sure I can buy a little bit of Bitcoins if we ever head toward 10K again, saying, all right, this is a bottom, we'll react out of 50% of this trend channel, signaling the willing for the market to eventually get out of this structure. That doesn't mean we're going to go nearly close to bullish. It simply means we want to eventually restore prices out of 10K area. So that was the motive of this trade, simply because of the price reaction we had yesterday, because we tried to go below the oversold cluster and we somehow failed. And that's exactly the kind of things that led me to believe that a tiny entry was necessary. That's the kind of entry I couldn't share with you guys. Not that I want to hide things from you, simply because the information in there was very subjective, and I always share you the trade in which you can benefit from the information, either because this is educational or because this is pure and simply applying the strategy rules and stuff like that. I don't want to lead you into every one of my personal trades simply because, all right, some trades are a little bit more tricky or subjective, and I don't want you guys to go down this road, because I know, especially when it comes down to cryptocurrencies, a lot of you guys tend to follow me blindly, and I certainly don't want that to happen. So anyway, for transparency purposes, I want to talk about this trade, even though, like I said, and I stand on this, it's a tiny position sizing. Most of my available cash for cryptocurrencies are still cash, waiting for better prices or further informations to trigger more entries. But yeah, yesterday I wanted to do at least a little bit of something, because I'm far behind in terms of cryptocurrencies. I've been loading up on Ethereum recently. Ripples, I haven't been touching them so far, but I've been lagging some way in terms of Bitcoin, and I've seen somehow early signs of potential strength over the course of the latest couple of days. So it still remains to be proven right or wrong, because I want the weekly candle close to be sure about whatever is coming next. But in a weekly basis, if we were about to reject trading in this area, in which we do a morning star pattern, like if this week ends up closing up to 9.3K, I think that could be the kind of signal that will certainly not deliver immediate gains. Don't think we're ready for such thing. All right, we're going to have to dry out volatility first. But my case was for us to dry out volatility in here, eventually made a dip, or eventually make a rec structure or whatever to go to very interesting price for a very short time frame, for a very short period of time. But the option was also we react bullish in here. I had, like I said, very few signals suggesting this probability, but apparently that's what the market is trying out right now. So requiring candle close to shift the balance into, yes, we're probably heading back to 10K. And anyway, heading back to 10K, like I said, will give us more than enough time to take the buy and holds, all right? It's just I take a little bit in here, and I will obviously, if we get to stay there and dry out volatility for a bit into 10K, like I'm talking about staying there for a couple months, all right, not just a few days. Staying in here and contracting prices like that out of the 10K area. If we manage to do this, then I'll buy and hold again. But for now, just a tiny buy and hold. Just the goal in here is to explain you my current stance for Bitcoin. What happens in here, I'm not surprised about the reaction. I wasn't nearly anticipating this anyway. It's just I just saw a little bit of early signs of bullishness. That's all I can tell. And it happens in a very interesting area, which is 50% of this trend channel. The fact that we're rejecting out of this area probably is signaling that we want to get out of this. Getting out, like I said, no bullishness, just I think more likely going in there, dying for a long time, and eventually buy and holding afterwards. All right? So it remains to be seen. Very dangerous trading in here, so please don't blindly follow in here. It's just, if you were a buy and holder, if you've been partial profit taking on the bubble just like I did, I think it is about time to start loading up again, patiently, slowly, just a tiny position, because we might be on the verge to terminate this bearish consolidation. And if that's the case, then we will just have done a couple of bearish oscillation. The first one would have been in here in a set of 2 waves, and then the second one would have been another set of 2 waves to the downside in here, spread it up with another set of 2 bullish waves in between. Kind of the motive being something like that. All right, like first wave, second wave, first wave, second wave, first wave, second wave, and we're over, all right? Typical 2 sets of wave consolidation, and if we're over, normally we're going to start building bullishness in here, accumulating to eventually further in time head to one more breakout. So, if you feel like it is an urgent thing to do, like if you don't load into Bitcoin right now, you will be left behind. And let me be clear, you won't be left behind. Even if we react bullish in here, it's going to take quite some time to validate a possible buy and hold entry. So, be rational. And let's move out for cryptocurrencies, because I'll just give you sorry, wrong button. Out of stock markets, I still tend to believe the stock market is heading bearish. Today's session definitely doesn't change anywhere of my mind. Yesterday was closing at the lows. Today is just simply retracing and trying to retest yesterday's highs. I think tomorrow is probably going to be a bearish day. I don't change anything of my plans, at least not right now. I see the market trying to go bullish in here as usual, all right? But as you can see, these things are really trying out, and if they fail, it's going to fail fucking hard. Just like I said, we're not going to buy 140. If it goes down, it's 100, or eventually even this area, which is 70 fucking 5. So Apple, very bad mood if they end up breaking a support. Microsoft's trying to reintegrate, but still trading below the previous trend lines. As you can see, very erratic pricings. Yesterday was bearish, today we're trying to go wrong footing structure. We can eventually be even wrong footing again tomorrow. So everything is messy all around. It's unpredictable. Volatility is going to play again. Bullish or bearish, who knows? All I can tell you right now is that odds for me remains tilted to the downside. It's certainly not the time to reverse the positions. Just anyway, normally if you are following the guidelines, you should have bearish positions already opened in Wall Street, with their stop losses at break even. So why the hell would you even care? It's just, all right, now learn how to fucking let go, learn patience, and just, all right, there's nothing to do right now. The market wants to be bullish, but it hardly can be. So we're oscillating before probably going lower. That's exactly what I think is the current motive right now. So waiting for tomorrow, we'll see. We've got the Fed minutes showing up. I think they're released right now. So apparently it doesn't trigger that big of a change. All right, pretty much not interesting. So we'll have a look at whatever shows up in the next few days. If we end up having some bullishness and being stopped out of the positions we took in here, then yes, stopped out, and I'll search for another position below the 3K. But anyway, right now I think it's not even about that. I think right now is more about, can we actually save that dip to extend and give us a little bit more visibility over the course of the next few days? Or option number 2, we can even find some buyers in here. We fail on the trend channel, and you know what that means. That means we're going to accumulate in here and create probably a breakout on the 1 hour time frames afterwards. So if we dry out in here and create a range, you know that we're going to accumulate probably ahead of a bearish breakdown coming along the way. You've got range signals suggesting, yes, I think we're very likely going to do this. Like tomorrow cannot necessarily be the end of the world, but I think oscillating in here for the next few days prior to probably another set of bearishness heading to the areas we have highlighted already. Either we go testing this trend line area, or volatility goes somehow a little bit out of control. We get to the 30 area, getting into 30 area, or at least 26 to 30 area. And if we do this, then in here things can start to roll a little bit out of control for temporary movements. If it really hits, if the shit really hits the fan, we can eventually go up to 50, but it would require, I think, additional catalytic information, like, I don't know, Trump really heading toward impeachment or whatever, but we need something to drive prices up to 50 volatility levels. Otherwise, I think 30 is probably the target we'll have. Remember that the volatility is trending bullish, so we're very likely going to break a resistance, so I can hardly see us holding prices below 25. I still tend to believe that this is on top of 25 and up to 30 that we need to have a look at volatility targets, though this is the reason why I tend to believe that I'll do my personal risk management in Wall Street at further discounts. Obviously, I don't know for sure, reason why I'm still trading at break-even, just in case I could be proven wrong. All right, in the meantime, still having a look at yen, just looking at the usual couple, all right, SPX, VIX, and yen. So just to see if Wall Street's heading down over the course of the next few days, how is the gold reacting? How is the VIX reacting? How are the bonds reacting? How is the yen reacting? Yen is still heading firmly bullish anyway. I still tend to believe USD JPY is a strong asset right now. Strong is a very weak asset, so I'm still bearish on this one, even though it tries to retrace. All right, they're trying hard to to avoid printing bearishness in here, but anytime we get to those areas, we see that this is the yearly supports, that there is nothing to hold prices below. So like I said, can go pretty fast in here if we ever trigger this one. The market doesn't want to go there. I'm clearly stating this out loud. But once again, there is a big problem with Wall Street. They definitely don't want things to happen, but they might have to. All right, the macroeconomics still keep on deteriorating. So prices still don't follow, but I still tend to believe they're just lagging, but probably heading toward volatility. All right, so we'll see about that. If I end up being proven wrong and if volatility remains subdued, that's possible, of course, but very less likely. I mean, it's definitely not what I favor in terms of odds. Have a look at this. Really, really, really important. We're going to talk about this, obviously, but if this thing returns to positive territory, you know what that means. Bearish stocks, reversing euro curve, gold obviously has been reactivating bullish recently. So if gold restores bullishness, if dollar heads down because of yen heading up, meaning USD yen breaking supports, if we do have yieldings returning positive and stock market going down, you know that this is huge fucking danger. So like I said, VIX to 30 I think is a decent target. So you please don't forget about profit taking if we ever get close to 30. And anywhere below 25 to 30 needs to be partial profit taken. Now, if you want to play up to 50, which is dangerous, I personally won't play that with the VIX, but I'll play it with the stock market instead, all right? I think the stock market must absolutely not be entirely profit taken. Hold those fucking positions for monthly time frames, because if the shit ever end up hitting the fan, then you'll still be in there, able to reinforce positions just because you still have money to maintain average trading prices as high as possible, so you can safely reinforce without getting into too much leverage taking or whatever shit that could be. Because if we go down, that simply doesn't mean we'll keep on going down. Many things can move prices higher, like Trump wanting to reverse or whatever. It can be noisy, all right? It's not because it starts to go down that it will do in a straight line. It's just, it's possible, and you must be ready for it. Though if you reinforce, you must not do it too aggressively, which means you need to have have fucking positions at the market top to safely reinforce if necessary. I'll obviously tell you, all right, I'll try to do it real time if something like that happened, but all I can tell you is that I see all my dominoes heading into a very dangerous way. All right, the junk bond still failing hardly below resistances, ready to break a support. If they do, you know what the hell's going to happen. All right, junk bonds going down, yield curve re-reversing, VIX heading to break resistance. That can't be bullish for stock market. I don't know how you want to put it. Some people tend to believe Trump will save whatever, the Fed will save. Everyone will always save the market. If we break a resistance on the VIX with a bullish gold, bullish yen, and bearish junk bonds and bullish yield curve, you can't be bullish with Wall Street. I can't stress that enough. I know some of you guys right now think it is about time to either do some counter trend trades or whatever shit that is. It's freakingly dangerous to go bullish on Wall Street right now. Please don't do it. All right? Hold on to the bearish positions. If they end up being proven wrong, then they will cost you nothing. But learn how to let go with your tradings. It's really important, especially with Wall Street right now. We need to wait and see. So learn how to do this. But the danger is rising. If the shit starts hitting the fan, don't be surprised. It's just a plan triggering. If the plan triggers, whatever comes next, it's just validation, then confirmation. And slowly but steadily, I'll start reinforcing my exposition to those markets. As for now, I'm still, and I stand on this, bearish. Yes, crazy fucking bearish. No. Am I leveraged? Definitely fucking no. Am I safely set as a bearish trader? Yes, and I still stand on those trades, and I'll hold them as long as they still are not yet invalidated. Simple as that. I know some of you guys have been exiting the trades at the market top because we were close to reach out the market top. Close, but we didn't. All right? And that's a huge difference. All right? Though, if you done the mistake, then that's your problem. I never told you to exit those trades. I always told you the stop loss is at the fucking market top. And as long as we don't go there, I'm in. Though, all right? But anyway, all right, that's the topic for another day. I don't want to make this one long. So pretty much an express briefing, mostly talking about my change of motion into cryptocurrencies. Just not a huge reversal and change of positions or whatever. Just switch a little bit of my expectations to something less bearish, just a little less bearish. Reason why I just wanted to take a single tiny buy and hold entry, 10% capital increase. Very, very tiny position though don't misunderstand what I'm saying in here. It's not about time to go crazy to the moon bullish. Definitely fucking not. All right. Bye guys.